If your company is spending money with vendors, there is one document that sits at the center of your procurement process. And in my experience, most companies does not take the time to really understand what that document is. And the document is a purchase order. And in my experience, for working with hundreds of companies on procurement and AP processes, that's the most important document when it comes to spend control as well as implementing more better financial controls. So in today's video, I'm going to break down what is a purchase order, when to use it, and what are the benefits you get by having a purchase order in place. So let's start with what is a purchase order. In simple terms, a purchase order is a formal document that is issued by a buyer to a supplier. So buyer is the company that is purchasing, supplier is the vendor or an individual that is performing a service or kind of giving you a product, right? Let's say you bought paper, you bought laptop, and so on. So the person who is supplying, let's say if it is you're buying it from Lenovo is a supplier and you are the buyer. And it lists down exactly the requirements on what is being purchased, by whom, and under what terms and conditions, right? So like, when are you going to deliver it? What are the terms and conditions that governs the document and so on? So that's kind of the basic purchase order process. And a purchase order needs acceptance from the supplier. Unless it is accepted, it is not a binding document or a binding requirement between both parties, right? So I issue you a purchase order, you are a vendor, you accept it, that becomes a binding document. So that's at a high level what a purchase order document is. Now let's look at what it looks like, right? So if you look at any conventional purchase order, on the top of it, there is a PO number and a date. So the PO number is the unique number that a vendor would refer to or you would refer to during the entire life cycle of the purchase order, which means issuing the purchase order, receiving the purchase order. When the invoice is sent by the vendor, they refer to that PO number on the document. It's referred everywhere. So you can track every document that is related to the PO. The second is the creation date or when the PO was issued. And the reason that's important is it dictates the delivery timelines, right? So if you have a timeline of, from the time I get the purchase order, I'll deliver you a product in, let's say, 2 weeks, then the creation date or the date when the PO is issued is the starting point for that. Now, then next is the vendor details. Like if your vendor has multiple locations, from where are you basically requesting the product or service to be delivered, and where it needs to be shipped to and where it needs to be billed to. So ship to is your exact location where the product needs to go. Now, this is more important for tangible products than services, but the ship to dictates that. The second is bill to, so where the vendor should be billing you the invoice once they have performed the service or delivered the product, right? So that is the ship to. Now, the most important aspect of a purchase order is the line item section. In the line item section, you are defining or kind of mentioning what are you actually buying. So a description of the product or service that is being purchased, the quantity, the lead times that you're requesting, like I need this by so and so date, of course, the pricing and the total amount, any taxes, shipping, all that is in that line items. And the final section on the purchase order is the total, where, okay, what's the total amount? Maybe you have 3 lines in it, each $100 each. So then now it's $300 total. Maybe you have to pay taxes to the vendor. So you're adding taxes and shipping cost on the purchase order. So the subtotal includes the line total, the shipping, any taxes, and that makes your final total. So to continue with the same example, let's say 300 is the lines, you're paying $50 for shipping, so that's $350. There's probably another tax of $20, so that's $370. So that's the total purchase order document. Now, once you have all those details, right, you can also add any special comments, any expectations that you need from the vendor, specifically any terms and conditions that you want to add. All that can be mentioned on the purchase order document. Now, just issuing the purchase order, as I mentioned before, it needs to be accepted by the vendor. So the acceptance means the vendor is accepting all the terms that are mentioned on the purchase order. And that gives the opportunity for the vendor to come back and say, maybe if there's a discrepancy or they don't agree on certain terms, they can come back and, that back and forth can happen. Now, some purchase order or some companies have purchase order process where if the vendor does not respond within a specified time limit, maybe 24 hours or 48 hours, the PO is deemed accepted. Now, again, that varies from company to company, but that's a common practice. Now, if there's a disconnect between what the buyer is requesting versus what the supplier can do. Let's say I requested an item and it's not available anymore, or there's a lead time of 2 months versus, I just need it next week. So that gives the vendor the opportunity to come back and say, hey, this is not available right now. Do you want me to replace this with something else, or are you okay waiting? So the acceptance process includes all that, right? That's why this is super critical, is to set up a process in the beginning so that it gives you an opportunity to go back and forth, so later there are no disputes on what you actually agreed to buy or under what terms and conditions the vendor agreed to supply the product or service. So let's now look at why companies need a PO process. So number one is the spend control. So without a purchase order process, there is no way for companies to know what is their committed spend, like what they have agreed to purchase from somebody. Because if you don't have a PO process, here's what's happening. People are buying through credit cards, or they just call the vendor on whatever they need to buy, and vendor delivers the product or service. And now you are just looking at an invoice which nobody approved, right? So there is no spend control. And if you have a PO process in place, that means people are putting in a request for whatever they need to purchase before they make the purchase, right? So that is proactive spend control. Number two is it prevents both parties in case of disputes. So let's say, for example, you have a lead time of 2 weeks and you requested that and the vendor accepted it, but the vendor did not deliver the product for 4 weeks. And because of which now you're late in your schedule of delivery and so on, or maybe you're manufacturing products and you are not able to fulfill the demand of your customers. So now you can go back to the vendor and say you were late, or if there were any financial penalties for the vendor to be late, now we can look at the document and said, this is when it was issued, this is what you agreed, you did not deliver. So there's no dispute on what was actually agreed upon because you have a formal document. And number three is the audit trail. Now, as companies scale, they need to have proper spend controls in place or internal financial controls in place. One of the control is the ability to have a spend reviewed before you actually make the purchase. Now, having a purchase order process streamlines the approvals. So now your auditors can come and look at when a PO was created, to whom it was issued, what was the amount, who approved it, does it match your delegation of authority or your purchasing policy, and the timestamp. All that is in one place for an auditor to review. And imagine if that was not the thing, or your PO does not exist, you have to actually go look up your emails or Slack messages, call people, and so on. It becomes really, really cumbersome. By the way, if your purchasing process is a mix of spreadsheets, emails, and Slack messages, then click on the link below in the description to schedule a time with one of our product experts so we can walk you through how exactly ProcureDesk can help solve that. All right, now let's look at how a purchase order gets created. It's really a 3-step process. I'll cover all that in detail, right? Step one is creating a purchase request. So before you issue a purchase order to the vendor, there's a step before that, which is called purchase requisition. So a purchase requisition, put it in simple terms, is an employee going in and saying, I need to buy this. So typically that covers is what you need to buy, why, there's a justification for that. Maybe I need to buy a new laptop because my old one is broken, right? As an example. Or we are ordering materials for certain projects and so on, right? What is the estimated cost? If they know the cost, of course, who is my preferred vendor? Maybe they already picked up items from an existing vendor, or it's a new vendor, so AP team needs to be involved, review the process, and so on. So that is the purchase request process. And that is a proactive spend control we were talking about, is now an employee can specify what they're buying, from whom they're buying, and also which budget it is going to come from. So if you want to have more proactive spend control, it's through the budgeting process, right? So where you can select a budget and the system can check in real time. Do you even have the money before you kind of make a request for purchase? So that's step one. Step two is once the request is created, it must be reviewed and approved by someone in the organization. And the idea here is you want somebody to review and say, is this for the right business reasons? Do we need to move forward with this purchase? 3, do we have the budget for it, right? So number one is, let's say I need to buy some office supplies for my office. Now, if it is maybe less than $250, maybe I don't need approval, right? Because it's such a small purchase. Or maybe if it is more than $250 and $1,000, it needs to be approved by a manager. Over $1,000, it needs to go to, let's say, finance team. And maybe CFO wants to see anything that is over $100,000. These are some of the examples of what a purchase order approval process looks like. And of course, it varies from companies to companies in terms of how much autonomy you want to give your employees, but define the process and have the system kind of follow have a system through which it kind of goes through one step to another. All right, that's step 2. Number 3 is once the purchase order request is approved or requisition is approved, now you generate a purchase order and send it out to the vendor. Now, here the process might vary from company to company. So for example, you're purchasing an item for which you already have negotiated a cost with the vendor. Maybe the procurement team doesn't need to get involved. All you need to do is issue a purchase order and send it out to the vendor. Now, you could send it out to the vendor in one of two ways, either like an email or fax, or you could electronically send the PO to the vendor. Now, most large companies like Amazon, CDW, Staples, and so on have a process where you can receive the PO or send them the PO electronically. There's no need to generate PDF documents, print it, send it out. It just makes the whole process much more seamless and predictable. The second example here would be maybe your procurement team doesn't need to be involved now so that they can go in and negotiate the cost, right? This is more applicable when a requester or a buyer who submit the request for purchasing something don't have a preferred vendor in mind, and procurement needs to go and get the price and things like that, right? And so that's kind of the 3-step process, right? Create a purchase request, get it approved, and once a purchase request is approved, a purchase order is issued to the vendor. All right, now let's look at what happens when a purchase order is issued to the vendor. So the steps that follow. Step number 1 is the vendor acknowledge the PO. So we talked about, unless the vendor acknowledges the purchase order, it's not a binding document. So the whole process of the vendor reviewing the purchase order request, looking at the items that you're looking to purchase, price, delivery, lead times, all that is reviewed, and the vendor might come back and say, yep, I got it, this is good to go, or maybe we need to change a few things, right? So that's step 1. Step 2 is once the vendor acknowledges the purchase order, they will either deliver the service or ship the product to you, right? If it is a tangible product. And on your end, you are creating a goods receipt note or a GRN to confirm what was actually delivered. And the goal here is to check against the purchase order, right? So if you order 100 widgets, how many did you get? And if a service was performed or not. Step number 3 is then the vendor sends you the invoice and say, hey, all right, I performed the service or I delivered the product. Here is what I did. Now please go ahead and pay me. Now, before a vendor can be paid, you need to match the invoice with a respective purchase order. Now, if you go back to the whole thing we were talking about, right? This is the whole life cycle. Invoice has a purchase order number on it. Now you can match it and say, all right, this invoice is for this purchase order number, this line item, and so on. Now you can match it with a receipt also called a 3-way match. So you confirm, okay, what was ordered, what was received, and what was invoiced. So now from an AP team perspective, if all the 3 documents matches, I do not need to spend time chasing people for approving an invoice. I will only go for or ask for approval if there is a discrepancy in the matching process. And the discrepancy could be, hey, the price did not match, or we ordered 100 quantity, we got 100, but the invoices were 120 for some reason because the vendor made a mistake. Whatever the case, the system or a process can do that for you. Now, if you want to see how a modern procurement system can help you with implementing this purchase order process, all the way from requisition, approvals, generating the purchase order, receiving the invoice and matching the invoice with doing a 3-way match or a 2-way match, click on the link below to schedule a time with one of our product experts. And in that call, we'll kind of walk you through a step-by-step process on how a PO system can help you with better spend controls, better auditing process, and automating the matching of the invoice with the purchase orders. Again, click on the link below to schedule some time with one of our product experts. And if you're interested in knowing what's the best purchase order software today, click on this link to watch the next video.